This question tests students' understanding of the two methods for presenting operating cash flows in the statement of cash flows. The key phrase is major classes of operating cash receipts, less the major classes of operating cash disbursements. This description refers to a method that reports actual cash inflows and actual cash outflows from operating activities. Students should distinguish between the direct method and the indirect method. The direct method reports cash received from customers, cash paid to suppliers, cash paid to employees, cash paid for interest and taxes, etc. The indirect method starts with net income and adjusts for non-cash expenses, gains/losses, and changes in working capital to derive operating cash flow. The wording of the question clearly matches the direct method. A direct method of calculating net cash provided or used by operating activities. Correct. The direct method presents major operating cash receipts and major operating cash payments separately, allowing users to see the actual sources and uses of operating cash. This is exactly what the question describes. B. Cash method of determining income in conformity with generally accepted accounting principles. Incorrect. The cash basis of accounting is a method of recognizing revenues and expenses, not a method of presenting operating cash flows under generally accepted accounting principles. C. Format of the statement of cash flows. Incorrect. Although the statement of cash flows includes operating activities, this answer is too general and does not identify the specific method described. D. Indirect method of calculating net cash provided or used by operating activities. Incorrect. The indirect method begins with net income and reconciles it to operating cash flow through adjustments for non-cash items and working capital changes. It does not list actual cash receipts and payments. Correct answer. A. Direct method of calculating net cash provided or used by operating activities. Exam tip. To distinguish the two methods. Direct method reports actual cash receipts and cash payments, cash collected from customers, cash paid to suppliers, cash paid to employees. Indirect method starts with net income and adjusts for non-cash expenses, e.g., depreciation, gains and losses, changes in working capital. A useful memory aid is direct equals direct cash receipts and cash payments. Indirect equals indirect reconciliation from net income to operating cash flow. Therefore, the description in the question clearly refers to the direct method, making A the correct answer. This question tests students' understanding of adjustments made under the indirect method when preparing the statement of cash flows. The indirect method starts with net income and adjusts for non-cash expenses, added back, non-operating gains and losses, removed, and changes in working capital accounts, current assets and current liabilities. The question asks which item would result in a decrease in operating cash flow. Students should remember the general rules. Increase in current assets, subtract from net income. Decrease in current assets, add to net income. Increase in current liabilities, add to net income. Decrease in current liabilities, subtract from net income. Applying these rules will identify the correct answer. Amortization expense. Incorrect. Amortization is a non-cash expense that reduces net income but does not use cash. Under the indirect method, it is added back, thereby increasing operating cash flow, not decreasing it. B. Decrease in income taxes payable. Correct. A decrease in income taxes payable means the company paid more cash for taxes than the tax expense recognized during the period. Since cash has been used to reduce the liability, this adjustment reduces operating cash flow under the indirect method. C. Proceeds from the issuance of common stock. Incorrect. Cash received from issuing common stock is a financing activity, not an operating activity. It does not reduce operating cash flow. D. Decrease in inventories. Incorrect. A decrease in inventory indicates that less cash is tied up in inventory, releasing cash for operations. Under the indirect method, a decrease in inventory is added back, increasing operating cash flow. Correct answer: B. Decrease in income taxes payable. This question examines the objectives and usefulness of the statement of cash flows. The keyword, except, is critical because it asks students to identify the item that is not a primary purpose of the statement. According to accounting standards, the statement of cash flows provides information about cash receipts and cash payments during a period, helping users evaluate the company's liquidity, solvency, and financial flexibility. It also helps users assess the company's ability to generate future cash flows and understand its investing and financing activities, including significant non-cash transactions disclosed separately. However, the statement is not designed to evaluate management's efficiency or profitability in using company resources. Such evaluations rely more heavily on the income statement, statement of financial position, profitability ratios, and performance measures rather than on cash flow information alone. A company's ability to pay dividends and meet obligations. Incorrect. The statement of cash flows provides valuable information about the company's cash-generating ability and liquidity, helping users assess whether it can pay dividends and satisfy debt obligations. B. Company's ability to generate future cash flows. Incorrect. Historical cash flow information is widely used to predict future cash-generating capacity, making this one of the principal objectives of the statement. C. Management with respect to the efficient and profitable use of the company's resources. Correct. Although cash flow information may provide some indirect insights, evaluating management efficiency and profitability is not a primary objective of the statement of cash flows. These assessments depend mainly on profitability measures and other financial statements. D. Cash and non-cash investing and financing transactions during the period. Incorrect. The statement reports cash investing and financing activities, while significant non-cash investing and financing transactions are disclosed separately, helping users understand major financing and investment decisions. Correct answer: C. Management with respect to the efficient and profitable use of the company's resources. Exam tip. The statement of cash flows is primarily used to assess liquidity. Can the company generate enough cash? Solvency. Can it meet debts and dividend commitments? Financial flexibility. Can it adapt to future opportunities and obligations? Future cash-generating ability. Can operations continue producing cash? A useful memory aid is: cash flow statement equals cash generation, cash usage, and cash sustainability. It is not primarily intended to evaluate management efficiency or profitability, making C the correct answer. This question tests students' understanding of the indirect method of preparing the statement of cash flows, specifically the calculation of net cash provided by operating activities. The key is to identify which items belong to operating activities and which belong to investing or financing activities. Under the indirect method, the operating section starts with net income and is then adjusted for non-cash items and changes in working capital. Cash flows arising from investing activities, such as buying or selling investments, and financing activities, such as issuing shares, are reported separately and are not added to operating cash flow. Students should be careful not to confuse cash inflows with operating cash inflows. Not every cash receipt belongs in the operating section. The information provided is: net income, $100,000 sale of investment securities, $125,000 issue of additional company stock, $10,000. Under the indirect method, net income, $100,000, is the starting point for operating activities. Sale of investment securities is an investing activity, so it is not included in operating cash flow. issuance of common stock is a financing activity, so it is not included in operating cash flow. Since no additional operating adjustments are given, the amount reported as net cash provided by operating activities. A. $100,000. Correct. This is the correct operating cash flow because the other two transactions belong to investing and financing activities. B. $135,000. Incorrect. This incorrectly adds the proceeds from selling investments to operating activities. C. $225,000. Incorrect. This incorrectly combines net income with investing proceeds. D. $235,000. Incorrect. This incorrectly combines net income with both investing and financing cash inflows. Correct answer. A. $100,000. Exam tip. Under the indirect method, operating activities begin with net income and adjust for non-cash items and working capital changes. Investing activities include purchases and sales of long-term assets and investments. Financing activities include issuing shares, borrowing money, repaying debt, and paying dividends. A useful memory aid is: net income belongs to operating, asset transactions belong to investing, capital transactions belong to financing. Therefore, only the $100,000 net income appears in the operating section, making A the correct answer.